What was your take on Jay Powell's comments? Did you come off with the sense that he was hawkish or dovish?
I came off the sense that he was straight down the middle, and here's why I say that. He observed that indeed policy is already restrictive. He observed that they're making progress towards their goals. He observed that, and importantly, they're making progress towards both goals. And he said they had to be prudent or cautious in how they proceed. So I think in terms of the short term, it felt more like a wait-and-see speech, no movement in November. He had to say, as he did, over the longer term, the economy continues to be strong, and they are prepared to move. So I think I wouldn't describe it as hawkish. I think it was straight down the middle with probably not much excitement about moving in November, open to moving, if necessary, one more time this year or maybe early next year. So I don't know if that's hawkish or dovish. I think he's trying to take it straight down the middle.
I think a lot of people are trying to figure out if it was hawkish or dovish as well, Roger, in all fairness. I do want to ask you about his comments about bond yields. He basically said, and I'm paraphrasing, I'm not saying exactly what he said, but he says it looks like the rise in bond yields is doing some of the Fed's work for it. He believed that they were rising for what he called the right reasons, not just because people believe the Fed is going to take action. What did you make of those comments?
I think two things. One is, yes, they are not anxious about it. I've heard a number of Fed officials in their public statements saying something very similar, that because the 10-year and bond yields in general are higher, that may be doing some of the work for the Fed. I was surprised that he said it had nothing to do with Fed expectations or expectations of Fed policy. That's almost never the case. But he is right, there are other factors as well, including an expectation that the economy is going to continue to be relatively robust, as we've seen from incoming data. And I think he mentioned appropriately, fiscal policy. The government is having to issue quite a bit in the way of Treasury securities to make up for the spending that's going on.
There's one change in tone from Jay Powell. I know you noted this as well. We had initial jobless claims out yesterday, lowest level since Q1 of earlier this year. And he didn't really highlight that. In previous times we've heard from Jay Powell and other Fed officials, they've really cited tightness in the labor market as inflationary. This time, didn't really talk very much about it. What did you make of that?
I made of it exactly what you said. So one of the reasons I answered your first question is straight down the middle, is things he didn't say that he has historically said. One, he did observe that there is some tightness, but the labor market seems less tight than before. Two, he didn't talk about what's called, sort of super core inflation, which was one of the things that he had been talking about in the past. So I observe, as you did, some of the things that were not said were, to me, pretty telling. And that's why I came to the conclusion that probably not a move in December, but in November, but ready, but not that decided about a move in December.
All right, so to the big question now, Roger, I think a lot of people are probably asking you for advice about this. When do you expect the Fed to actually cut? People are saying, of course, they have to stop hiking before they can cut. But when do you see a cut at least possible? Do you see it in the first half of 2024, the second half of 2024, at all next year?
I think my view has been probably not next year, if next year at all, certainly towards the latter end of the year. First half, absolutely not in the cards. Depending on how things play out, that next hike, the last hike, might not be December. It might be the beginning of the year if the economy is proven to be strong enough. So I think it's highly unlikely to see a cut next year. If we do see one at all, it would certainly be the second half, certainly not the first half.
Let me ask you a more longer-term question. Jay Powell, and again, I'm paraphrasing, essentially said, and that's what I took out of it, that we might just be in an environment where we're going to have a higher neutral rate. It'll just be higher from now on. What did you make of that?
I agree with it, frankly. I think many people do not recognize how unusual the last 10 to 15 years have been. It is not meant to be that money is free, relatively speaking. Getting to what's called the zero lower bound, where the Fed set Fed funds target is at or close to zero for long periods of time, is abnormal, not the normal thing. So I would think that the possibility of rates being, frankly, back to normal, higher than they have been historically for the last 10 to 15 years, but similar to what they had been earlier, is very much in the cards. There are a lot of forces that suggest that might be the case. So I'm in alignment with the thought that we should not get used to money being free. That was abnormal, and we should expect more normal pricing for money all along the yield curve.